Good day, everyone. We are going to have and discuss home office and branch accounting general procedures for this session. Then this will be the first part of the series of discussions involving home office and branch accounting. So just for the general procedures, we can have like parts 1 and 2. And then for the special procedures, we will see as to how many parts we can have. Now, if we are going to think of a business that is growing and then it has decided to operate to a lot of geographical area, just like, for example, Philippines, which is an archipelago composed of a lot of islands. So let's say that the main office is in Cebu, and then the company, the management decided to operate and have branches to the other islands or regions or provinces, then such would have certain concerns, especially if certain transactions are done between the home office, meaning the mother company, which is in Cebu, and the branch or branches which are located in other provinces or areas. So in fact, even if, like, for example, if we think of the branch or branches, they can be also in other places. So literally like other barangays, municipalities, or localities or provinces or regions aside from the islands. Most especially with, let's just say, in-lock countries. So meaning they are just having the lands surrounded, and the lands are just the areas within those countries. They don't have bodies of water like seas and oceans surrounding them. So if ever transactions are done by these particular agencies, certain accounting considerations shall be made, most especially with the transactions made by them to which other, from home office and branch to home office and vice versa. Well, they can also do or perform transactions independently of each other, but for sure there would be some cases or times or situations that they will also do transactions by or with themselves. So the point of this particular chapter. Now, growth is very eminent, and growth is but natural for certain organizations, especially if we think of growth as really something that is for the company. So that's why if we think of home office and branch accounting, we think of more sales, more offices, more profits for the business. And this is also the way by which the organization can also earn more. All right, so hopefully that is enough for the sort of introduction. And now let's proceed to the discussions on our, of course, PDF presentation. So let me just manipulate, and then here we have it. So chapter 12 will discuss about home office and branch accounting general procedures. Why is it called general procedures? That's one thing that students would ask, just like you guys. So general procedures on the sense that the topics that are discussed here are normally those procedures and processes done by home office and branch accounting and their operations on regular basis. And then these are the simple, or let's just say less complicated items, if not simple. So as said, growth is very eminent, and then we have to establish our outlets to strategic locations or places for the benefit of the organization. So these outlets can be sales agencies or branches. I've discussed already branches a while ago, but also sales agencies can be set up. Now, what's the difference between the two items of discussion here? Well, to give you the idea, if we say sales agency, basically the transactions that it can do would be limited compared with the branch. The branch really has more autonomy or independence compared with the sales agency. A branch can perform transactions just like the home office. It can also prepare financial statements and, of course, has to prepare financial statements independently of the parent or home office because such is needed so that we'll be able to know the financial position, the performance, cash flows, other information, changes in equity, those things found on our basic complete set of financial statements. While a sales agency can just perform limited operations. So normally, it does not prepare its own sets of books of accounts, and more so with preparation of the financial statements. Such will not do that. So it can, for example, do limited transactions like just an intermediary between the home office and a certain customer. So the sales agency, for example, will have to keep the goods delivered to the customers by the home office temporarily and will deliver that, for example, to the customer. So let's just assume that it is not a setup for the organization to deliver directly to the customer. So that example. Another thing is that a sales agency may carry or may keep samples of the products or would display the merchandise, but does not here carry stocks of it. So no available inventories kept, balances of them in the warehouse of the sales agency. So if ever one is interested, that will be directly ordered from the home office, for example, or any other branch for that matter. And because it is a sales agency, well, sales, so we think of the selling activities being done, but then let's just say the accounting processes are not being done there. So there could be also collections that could happen, or let's say entertaining of orders coming from a lot of people. But again, the operations are limited as compared to branch. And that's why our focus here would be the branch, because a branch would prepare again its own sets of books of accounts and financial statements. So how do we account though first for sales agencies? For sales agency, well, we are just going to have simpler sets of jobs or works. Well, if we would like to summarize what the sales agencies would do in accounting, it could be just this way. So a sales agency will just have to do the listing of inventories, for example, depending on, of course, the authorities given to it or them. And then in terms of the recording of the transactions, actually, such will be recorded by the home office. So that's why if, for example, the home office would be recording now the transactions which are done by sales agencies on its books of accounts. Again, note that sales agencies do not keep their own books of accounts. So the home office will just have to use the account titles regularly, just like we have known from accounting 111 or 1 basic accounting fundamentals of accounting. But then we are going to attach the name of the agency. So that's why you can see here sales slash sales agency, rent expense slash or dash sales agency. So what's the point of that? Well, we would like to know as to whether those accounts belong to the agency. And then this is for the proper tracing and the proper determination of, let's say, the performance, if we talk about the income statement, or let's just say the profit or loss of the agency, and many more. So we can also think of other items on the financial position, for example, the cash flows, changes in equity, etc. So those items found on the financial statements can also be determined out of these account titles. And we can also think like if we have, let's just say, hundreds of agencies on a certain country, or let's just say the company is based on the Philippines and it has hundreds of agencies in the Philippines. And so it's possible that there would be different books, or let's just say journals or other books of accounts kept for each agency. If you think of like multiple transactions by agency. However, it's not also wrong to just have like mix all the transactions, because anyway, we have already attached the name of the agency to each account title. So it's going to be easy. In fact, another example will be for the cost of the goods sold. So cost of goods sold slash sales agency and credit merchandise inventory. So this is for perpetual inventory system. For periodic credit to shipments of merchandise dash sales agency, which is somehow ironic because remember we said from accounting one that if we use periodic inventory system, normally we do not journalize the second entry, which is after the sale, and that is the reflection of the cost of sale. So normally we do not do that. However, this is advanced accounting, so we just have to respect this point of view. Then, well, in terms of accounting presentation, so the shipments of merchandise sales agency is deducted from the total of beginning inventory and purchases. So this is like the cost of goods available for sale less the shipments of merchandise by the sales agency then. So this is just an extension of the formula that what we have known even from our basic accounting years, that to compute cost of goods available for sale, that is the sum of beginning inventory and the net purchases. So to extend that, we just have to deduct the shipments of merchandise by sales agency, because just to think it, if we shipped now portion of our goods, then that's going to be a deduction for our goods available for sale for our own operations. So this also means that the shipments are made by the home office to the sales agency. All right. So another thing also that we should know here is if the home office elects not to determine separately the sales agency net income, the transactions of the sales agency are recorded in the home office's own revenue and expense account. So this is what I've said a while ago. Now, and that's the point again of attaching the respective name of sales agency to the accounts. Again, example, it is the Cebu agency. So we would write sales dash Cebu sales agency. But if in Cebu we have plenty of branches, so we can be very specific, like what municipality or city of Cebu that is. So that's one thing also. If we are going to record separately, and that's what I meant when I said a while ago that we just like kept separate notebooks or books literally or logbook for each agency. And we can record separately or not separately. All right. So it depends upon the. What I meant is that it's not a requirement if we are going to record separately or not separately. However, I would say that separately is really a good thing because we would be able to determine immediately all items related to financial statements for all agencies of the company. And then if we use not separately, which is with the dashes and the name of the agency, it would be like tough for the organization to determine those items found in the financial statement. So the choice of the management. Then, but for me, as what I've said, or I would like to highlight, I like and love and appreciate recording separately. Illustrative entry. So this is an agency in Cebu by Manila Trader Incorporated. And then these are the transactions by the sales agency in Cebu for the respective, let's just say, month. And then you can notice that the transactions are recorded by the home office books or to the home office says books, that is Manila Trader Incorporated's books. So you can notice also again that the name of the agency has been attached to the account titles. So these transactions actually are recorded similarly with those transactions that we have met from our accounting years. Working fund, well, this is like the revolving fund or fund that is used for our transactions. We keep that in the organization or business, and then that fund is being utilized to finance those little amounts of transactions, and such would be replenished. It's like petty cash fund. So cash. Well, a while ago, there was a highlight that we are going to use impressed system for the working fund, hence the similarity to petty cash fund. So when this is established, we are going to debit the fund, credit cash or cash in bank. Most especially nowadays that we keep our monies, like most of them, with our authorized depository banks. Then shipment of samples, these are the entries now. Then you can notice we debited samples inventory to the Cebu agency. So the agency received the samples from the mother or the home office and then credit shipments to agency. So this is a deduction to the cost of goods sold, or to get cost of goods sold is also deducted, just like the ending inventory. Then sales orders on account. So these sales orders are already confirmed. So that's why we debit accounts receivable, because remember, if still orders, supposedly those are not yet sales. So we have to follow the provisions under IFRS 15. Anyhow, so this is like simple, it's confirmed. That's why this is the entry. Next, cost of sales. This is like periodic inventory system, shipments to agency. So we should have credited merchandise inventory if we use perpetual inventory system. So if we use perpetual inventory system, that is also very fine, because in advanced accounting, normally we use that method than the periodic inventory system. Number 5 is the replenishment of working funds. So to record, that is we debit the expense account and we credit cash. Then we close revenue and expense accounts of the agency. So to close, remember, we close first the sales, we close the cost of sales items, we close the expenses. This is treated as a corporation, so expect that there would be closing of income summary to retained earnings or accumulated profits and losses, our IAS term, after 7, but it was cut, so only up to income summary point. Anyhow, so I repeat, closing of revenue or sales, closing of cost of sales, closing of expenses, then closing of profit or loss to income summary, and finally income summary to retained earnings or accumulated profits and losses. But I'm okay up to this point. Then accounting for branch operations. Well, for the branch operations, we just have to think of the books of accounts or accounting records of the two as opposite items. So we think that the home office should be balanced with the branch's books respectively. And that's why the term here is self-balancing set of accounts. There are certain accounts really that would be self-balancing or be balanced at the end of the accounting period. And that's why we will be discussing later on the reciprocal or intracompany accounts. But before that, we should know that in the eyes of the public, or let's just say under accounting entity concept, there is but one entity that is to be reported for external reporting purposes. Hence, there is a need for us to combine or consolidate the financial statements of the two entities, meaning the home office and the branch. And we have, of course, like branches in real life. So if we have hundreds of branches, so we combine the home office's books and all of the hundreds of branches. And this is also the point why there would be certain elimination entries that are to be made. It is because if, for example, we ship as home office perspective to our branch certain goods, it's like transferring money from one pocket to another pocket of the same person or same us. I hope that is clear. And because this happens due to the concept of accounting entity or business entity. That is, the two or more entities are treated as one single economic enterprise or entity for external reporting purposes. That's why we eliminate those intercompany or intra-company transactions. The elimination will be discussed as we go along the way. Prior to that, so we will have the reciprocal or intracompany accounts. These intracompany accounts are the so-called balancing or self-balancing accounts in the sense that they should be equal at the end of the accounting period. And this is also because all transactions related to home office and branch in terms of their transactions between each other should be reflected to these particular accounts. So initially we have like two accounts. One is in the books of home office, and you call this the investment in branch or branch current account. Literally, this is the investment. These are the resources placed by the home office in the branch. Hence, investment in branch. And that's why investment in branch or branch current is treated as non-current assets under long-term investments or non-current investments. Because when we set up a branch, going concern concept, we think of an indefinite period of time for our operations. On the other hand, on another side, on the books of the branch, we have the home office or home office current account. This is normally an equity account, although I've read some books stating that this could also be a liability account because it's like an obligation of the branch management to the home office's management in terms of the resources being powered into the said branch. So that's the point of why, again, home office or home office current could be liability, but at the same time, it can also be equity. Then normally it is actually an equity account as treated. So where do we see the sides, or which sides can we see them? Remember, investment in branch or branch current, as said a while ago, is part of non-current assets, specifically under long-term investments. Therefore, it is found on the debit side, knowing that assets have normal balances on the debit side. On another hand, home office or home office current account is found on the credit side because it is either a liability or equity, but more on equity. Okay, again, the two should be equal. But because of recording of transactions which may happen later, so it's possible that the branch recorded ahead of the home office for the transfer from the branch to home office, or let's say the home office recorded prior to the branch, let's just say transactions like transfers of money or any other resources or delivery of goods or supplies or assets from the home office to the branch. So branch recorded that later on, and that's why there could be certain times, which is very normal at the end of the accounting period, that the two would not be equal. As to the adjustments, we will discuss such on the latter part of the chapter. And hopefully that is the second part or part two for the discussions. Then that's why adjustments are to be made. So this is the reciprocal nature of the two. Assets transfer or transfers to branch. Then this would result to a debit to investment in branch. And we can see it debit here, investment in branch found in home office books. In branch books, we see the home office and that is credit. So we think of the opposites, debit here, credit here. And then if assets are basically transferred from the branch, so that would be a debit to home office because we have to credit the asset that is released, and that would be a credit to investment in branch. On another hand, if we think of branch profit, that would increase the equity account, which is home office. While if it is a loss, that would decrease debit. And we think of the opposites on the investment in branch or home office's books. So for profit, it would be a debit investment in branch and credit for investment in branch. Next, establishment of the branch. This is an example of a transaction wherein the company establishes a branch. So in that case, we debit the branch account and credit the assets that are part of basically the investments of the home office. So credit cash 100,000, office equipment 20,000 for a total of 120,000. Then this is actually the receipt of the assets transferred from the home office of the Cebu branch. So if this is the entry of the home office, we think of the opposite on the branch. So you can notice that in the home office, the assets are credited. So for the branch, the assets are debited. This is investment in Cebu branch debit, so the home office would be credited. All right, so again, we think of the opposites when we record the transactions on the respective books. Then recognition of branch income or loss. So as said, for the branch income, that would increase the home office account. Home office account, again, is an equity account. So the income would increase it, but the loss would be decreasing it. So in this case, the branch would be recording this one as debit to income summary at 60,000 and then credit home office at 60,000. On the part of the home office in its books of accounts or records, we will have to debit the investment in Cebu branch at 60,000 and we are going to credit Cebu branch income at 60,000. Then a realization here can be actually made. And what is that? If you can notice, we think again of the opposite. So credit home office, debit investment in Cebu branch. Another one, when we record the branch income, it is actually seen, it is actually reflected here first on the part of the branch. So the branch books have been updated first because it is the branch's profit that we think of or about. And then after that, that's the time that there's an update on the home office. So I hope that is clear because this is the profit of the branch. Therefore, it will be reflected here. And it is possible that the update on the part of the home office could be done later on. That's also one realization here. Then another thing also is that later on, this particular entry, of course, has been recorded. This Cebu branch income being an income account will be closed along with the other income accounts of the home office. Okay, so that's again a thing that we should be reminded of. Next is merchandise shipments to a branch. If, for example, the branch and or the home office will be making the transaction, let's say, purchase of merchandise from outside parties, remember this would be the entry that is to be made. Just debit purchases and we credit the appropriate accounts that will be credited cash or accounts payable at 10,000. And then, however, if, for example, it will be different case like this one, that the home office transferred merchandise to the Cebu branch, so another entry could be made or done. We should be reminded that whenever transactions are made by the home office and the branch, vice versa with each other, that would result to intercompany or intracompany transactions and would really and always utilize the reciprocal accounts or intracompany accounts, investment in Cebu branch or branch current, and home office or home office current. You can also notice that we use the investment in Cebu branch and home office account. So we will leave that way for us to be aligned with the discussions of the author. Then this is shipment from the home office to the branch. So we debit the investment in Cebu branch account and we credit shipments to branch. So this shipments to branch again is a deduction in order for us to get the cost of goods sold. Then on the part of the branch, because the branch received the goods, so it will be an account, shipments from home office and credit home office account 80,000. Now we see also another two reciprocal accounts or intra-company accounts or intercompany accounts. We have shipments to branch and shipments from home office. If shipments to branch is a deduction on the books of the home office to get cost of goods sold, shipments from home office is an addition and inclusion in order to compute the cost of goods sold of the branch. So it is like treated as similar to purchases. We should also remember that because they are reciprocal accounts, so the two should be balanced, the two should be reconciled, and the two will be closed anyway at the end of the accounting period because they are nominal or temporary accounts. They're items of expenses or cost of sales. Next, what about if there would be freight charges on merchandise shipment? So let's say, for example, we have 80,000 merchandise shipped. Then this is from home office to branch. We have to be careful with the movement, by the way, of any transfer or any transaction involving the two, because that would have resulted to other entries or journal entries. Anyway, to proceed, so we have 5,000 freight, and this will be capitalized for investment in Cebu branch, meaning added, and it will be credited to cash 5,000 pesos. Then another one, if the Cebu branch reports the transfer, then it will have debited the shipments from home office 80,000 and would be debiting freight in 5,000, crediting home office 85,000. What is the learning point here? This actually means that for freight, that is going to be an addition to the investment made by the home office, but for the sake of the Cebu branch, that is treated as a cost of sale item. So freight in, just like something that is to be added to the cost of the shipment. Anyhow, you can also notice and we can realize actually that the two reciprocal accounts are equal. Then the shipments from home office and shipments to branch are also equal. The other two reciprocal accounts. Now we have four of them in the same transaction. And then the freight in is reflected as well as the cash. Freight in on the part of the branch because actually that is for the sake of transport or transfer of the goods to the branch. And then it is the home office that paid. So that is also another thing to be reminded or always be reminded about the home office and branch transactions wherein whoever does the transaction will have to record that and will have to reflect the appropriate account title. So for example, if that is payment, so that is the cash. And then if ever that is the item for cost of sale, let's say freight in, then debit freight in the branch books. Next, accounting for branch plant assets would involve a lot of things. But if this is like, for example, this is the acquisition of the home office of office equipment for its Cebu branch costing 30,000. So the office equipment will have to be recognized by the branch here. But then the payment, because it is done by the home office, is credited here. And we are going to pair such with the nominal or let's just say reciprocal accounts for this particular case. Investment in Cebu branch and the home office branch then. All right. So that's also one thing that we should take note. or consider here. Now, for this case, another thing, what if, for example, there is a purchase of equipment for Cebu branch, and then let's check. Okay, so this is, for example, the home office purchases 30,000 of office equipment for the Cebu branch. An assumption here is that the branch plant assets are recorded in the books of the home office rather than on the books of the branch. All right, so that's why there's really the dash here, Cebu branch, on the office equipment account title, just to emphasize that this is the office equipment acquired for the Cebu branch. And then this is also to emphasize that this is a situation wherein it is the policy of the company to, let's say, record any acquisition of plant assets or property, plant and equipment for the usage of the branch, but to be recorded in the books of the home office. So meaning that is an accounting policy of the organization as a whole. Because if it's not stated in the problem, normally we will do these recordings. And also, I would say that if we do not have this, like this is a dash, so probably like these are independent transactions of both the home office and the branch. So let's say we don't have this particular additional phrase or words, dash Cebu branch. I hope that is also clear. So this can be recorded independently by the home office and also with the branch. Okay, so another thing, what if, for example, the branch purchases plant assets that are recorded on the books of the home office? So this is how the branch will record the entry. Well, the transaction here is that, just to be clear and to be able to emphasize, that the branch purchases equipment in behalf of the home office. How did I know that? It's because it is carried in the books of the home office. So office equipment dash Cebu branch. Well, because there's an attachment here of dash Cebu branch. So this goes to say that the Cebu branch purchases equipment, pays for it. However, the policy of the company is that it is going to record the transaction involving purchase of plant assets on the books of the home office. This is a realization also because if we don't have the dash here, clearly it is the branch that purchases office equipment or plant assets items in behalf of the home office. So it is for the home office's usage, but the branch purchases it. All right, so that is also one thing that can be realized from here, along with the other items here of accounting for the branch plant assets. All right, so take note of that as well. Then apportionment of expenses. Well, for the expenses, there could be a lot of things. Expenses incurred by the branch, but paid by the home office. So that's a possibility then. Or the reverse. So home offices incur the expenses on behalf of the branch. Let's say the depreciation on the branch equipment carried on the home office's books. That's also a possibility. So let's say it is the policy of the company that the home office will have to record the branch equipment. So the depreciation will be carried on the books of the home office, but will be charged to the branch so that the branch also will be able to reflect that to its financial statements. And another one is allocations of the expenses incurred by the home office. So these are like the common organizational expenses, like the direct costs are for the organization's respective branches and departments, but common costs are the expenses for the organization as a whole, but to be allocated so that also all of the branches and the organizations, including the home office, would be bearing the said costs along the way or in the operations. All right, so here's an example of that particular case. We have the utilities expense or expenses incurred by Cebu branch and billed to home office account. Then in this particular case, the branch incurs it, but to be charged to the home office. Then depreciation expense on Cebu branch fixed assets carried on home office books. So actually these are the three situations here, and then advertising expense allocated to Cebu branch. To do that, it would simply have to debit the investment in Cebu branch account and credit the expenses for the allocation. For the first item, utilities, the expenses were incurred by Cebu branch but billed to the home office. So the home office actually would like have to pay for it because it is billed to it, but the branch will have to share and reflect the expense. So that's why it is credited here and debited here, addition to expenses of the home office. Then the second one is depreciation expense on the branch fixed assets on the books of the home office, but then should be allocated, should be charged to the branch. And this one clearly an allocation of common costs. So that's why all are credited and debited to the home office's account here clearly, and then prior to that, debited to investment in Cebu branch. It is also stated here, which is very important, just like with our failure or omission to record journal entries in our younger years or days in accounting journey, that in case of home office and branch accounting, if we fail to record, for example, these entries, then such would result to overstated expenses on the part of the home office. Hence, its net income would be understated or profit would be understated with more expenses. Well, the branch income, because it did not receive the shares and the charges of the expenses, so it will have lesser expenses and more profit or overstated branch income or profit. And that's why these entries again are very important. Now, this ends the sample intra or intercompany transactions. In real life, there can be more of them, and we should take note of that. Next, preparation of combined financial statements can be done. And actually, to do that, all we have to do is to eliminate the reciprocal account. So in this particular example, knowing that investment in branch is found on the debit side, being a non-current asset or long-term investment, and home office account is an equity account found on the credit side, respectively. So to reverse that, good thing here, they're already equal. So this is after adjustments, and we are now on closing. That's why we just have to put them in the opposite sides. To close is to simply make the balances equal to zero. So if one is found on the debit, put it on credit and vice versa. And this is what happened here as well as on number 17. Shipments to branch is found on the credit side, being a deduction to cost of goods sold on the part of the home office. While shipments from home office is an addition on the part of the branch. So that's why shipments to branch is to be debited, while shipments from home office is to be credited. So these are how the elimination entries would appear for the purposes of elimination, but would not appear on books of either the home office or the branch. So always remember that elimination entries are only found on the working papers for elimination of them. So found on the combination or consolidation working papers, but not on their separate books of accounts. All right, so that's it for part one. So make sure to stay tuned for the next part. Hopefully you learned something from this session. Thank you and God bless.